Good morning, traders. It's Thursday, July the 2nd. Today's going to act potentially like a Friday in terms of we could see weakness. People aren't going to want to hold, or they haven't been wanting to hold positions over the weekend as COVID slowly kind of creeps up and continues. And if we look at the previous Fridays, we had a big bout of selling, and we made a fairly significant low over here. If we look at the next Friday on I think it was the 19th, and then we've got the 26th. You can see more or less we've got a 5 day cycle where we keep putting in lows. And here we are on day 5, coming into resistance more or less. And it's a long weekend, so people may not want to be holding positions over 3 days as there could be some bad news that hits. So hopefully we'll see the market. It's pushing up into resistance into these candle wick highs right here. And we'll see if sellers step back into the market and start to pull it back down. Now, if this pattern does play out, we are going to see potentially a 9.25% move. That is a 100% Fibonacci move based on this drop and this bounce up to the high, and then obviously this would be the downside target. So that's where the market is trading. It's still in this big sideways range, more or less from here to here. And if it starts to break down, it could get pretty exciting going forward. But right now, it's still in limbo, holding its ground, and we'll see how the day plays out. Now, if we take a look over at the safe havens, take a look at bonds, they're slightly positive, but more or less, we saw some broad market selling yesterday at one point. We saw stocks kind of trade relatively flat on the session, and we saw bonds pull back. We actually saw metals pull back. Overall, everything took a little bit of a breather, and we'll see how things unfold going forward. Overall, bonds are pushing up into resistance into all these lows over here. So it's got a little bit of overhead resistance, but it is outperforming. If we look at TLT, you get a better view. Just zoom out a little bit more. TLT. If you look at the trend line we've got from these highs going across here, you can see it has broken above that trend line. It has pierced above here, so it is starting to trend to the upside and is starting to fall back down to this support level. Overall, bonds are outperforming the stock market and moving higher, and they have the potential here to continue to move up. Now, I don't know how much upside is left with rates near zero. I mean, we could see them rally back up to here. Maybe we see them go up to here. I'm not sure if they're really going to explode and go a whole lot higher. That would be a fairly significant run. But overall, I think the equities market, if they roll over, have got a lot more downside potential than trying to play bonds to move higher. But it could be a play of both. I think bonds are holding their ground because I think a lot of money continues to be very nervous about what's going to happen in the overall equities market. And that's why bonds have held up very well. Even though the stock market's rallied, bonds are still trading sideways and near the upper end of its range, more or less, from when the stock market started to rally. So it's still holding up very well. And if we look at the other safe haven, global safe haven, which is gold, it's pushing up and hitting multi-year highs. It did tag 1800, which we talked about in the previous video. It is a short-term resistance area and held its ground there for one day. Yesterday reversed back down. So we are seeing a lot of things hit resistance. The stock market's at resistance, gold's at resistance. If we look over at silver, our blue resistance line here, it has hit that a bunch of times. We are testing resistance. It pulled back yesterday. If we look at gold miners, they have gone up and tested this upper wick here where they sold down yesterday. They ended up recovering back there again, but again, everything seems to be testing at resistance, and there's that big potential that the market could start a pretty decent collapse at any point, and all these things could reverse and get sucked down with the overall market if that takes place. So there's a huge turning point where the equities are right now. If the stock market can get traction and break to the upside from this range, then I think we're going to start to see another leg higher. I think we'll see probably metals and miners continue to move higher as well. And it's going to be pretty interesting. But if they roll over here, I think we're going to see almost everything go into another big bout of downward pressure and selling in the market. And the big question will be, well, how big will that be? And we don't really know yet, but usually the market goes for a double dip when we have this type of sell-off that we had where the sentiment changes that drastically. So there is a lot of downside potential if we start to see things roll over here. Looking over at energies, natural gas up 0.8%. again, was trying to put in a rounding formation, then formed a looked like it was forming a launch pad to go higher with a reversal candle. Instead, it failed. We had more news of COVID that really sucked it down, and we saw it continue to go further. Now it's had a bounce. It's trading above the moving averages, but the 20 days still sloping down. It hasn't broke any of these previous highs, only this short-term pivot high right here. So overall, not too interested in natural gas at this point. If we look over at crude, up 0.6%. Let's just stretch this price out here. It continues to hang on this limb. It actually has a, we've talked about this several times, somewhat of a bearish, even though the trend is up, it has a bearish kind of undertone, this pattern in the market where it's gone from strong momentum, pauses and rallies, to it's at its first pullback and then a push to a new high, had a sharp pullback again. Looks like it's forming a bit of a bear flag. Maybe it's going to do it 3 surges to a high where you make a new high and then you get a sharp pullback, and then you make another high, you get a sharp pullback, and then if you get a third high and a sharp pullback, it's usually the end of a move. And we are into this resistance zone, this gap window. We had 100% gap window fill right over here, so it does make sense that money is now kind of more neutral to negative on oil, and I think we could eventually see this start to break down and pick up speed, and it could be a great play to the downside to apply an inverse ETF once we start to see some type of topping pattern and some type of breakdown take place. Let's take a quick look at Bitcoin. The BTC futures, more or less is the daily chart. It continues to hold its ground. Now, it has had a very nice rally, a pullback, had the second half of that rally right into 10,000. 10,000, very big whole number. A lot of people saying back over here that if it gets to 10,000, they are going to sell their position, cash out, or they're going to short it. And 10,000 will naturally become a resistance area when you're underneath it. It may poke through it a little while. As you can see here, poke through it. But the key is, can it break free and get through there? And overall, it is forming a bullish formation. This is a pennant formation, meaning it's consolidating, building up energy. It's coiling up here, and eventually it's going to have a pretty big move. And whichever way this coil breaks, I think it's going to have fairly significant upside. I think we got a potential for about 14,000 upside. If it starts to break down, I think we're heading down to around the probably the 8,000, 7,000 mark. We'll have to see how that would unwind and run some numbers. But overall, it is kind of still coiling here, and it's trying to digest this move. Now, this is a different type of asset class, so it is kind of acting a lot like gold and bonds, where it's rallied up, it's trading sideways as, hey, if the stock market's going to fall apart, let's get into some different assets, and that's where Bitcoin is holding its ground really well as an alternative currency, alternative asset class to potentially make money on or store your value if the fiat currency and the stock market start to get a little more haywire. Anyways, that's it for this morning. I'll talk to you in a little bit. Bye-bye.